Hello everyone. Let me check if the screen is showing right. Yes, it seems like the it's, it seems like the screen is okay. The sound is also very clear. And we will wait for a while, maybe 5 minutes, then we will just start on today's class. Just wait for a while for the others to get in, yeah. We will start on 2 minutes later, which will be 9 p.m. sharp. We already arranged for the next week class, and on next Wednesday, I'm going to teach about iron condo, which is a very powerful strategy to counter for the ranging market and also for those low volatility stock. This is a very powerful strategy that can just make you a very consistent income. And that will be the classes for Wednesday. And on Thursday, I will have a lessons which is conducted in Chinese, and it will be talking about the the bull vertical spread, which if you are a pro user, you will see a lot of the strategy that we share through the apps. And we usually just sharing the bull vertical spread and also the bear vertical spread, because this is very cheap when you're comparing to a single leg options, and it will be much more beginner friendly because it saves your cost and you can have more exposure to the other opportunity. So yeah, so if you come to the class on Thursday, then you'll be able to get to know about how all these vertical spread works, and then you can know the underlying theory. And also we will just going through how do we really just to conduct this kind of vertical spread by using the USmart interface. Step by step, we'll guide you through one step by step, and then just until the last step, which is clicking the buy button and the sell button. So it's kind of like you know, from the A to Z tutorings on this kind of strategy. And then on Friday, we already conducted quite a lot of psychology class on Friday, but on next Friday, I will have a summary that recap all the option classes till so far, and I will just do it in a nutshell, and then I will just quickly go through a very simple single leg options, which is the call options and the put options, and then I will talk about how to pick up options and what is the main factor that you need to pay attention to. But don't worry, it won't be very complicated. You don't need to know everything about options to just really make your options trading. You just need to know the most important thing we'll do. And yeah, so if you are a total beginner, you come for the Friday class, then you will know how to really do options trading in a more secure way. I don't say it's a secure way, but it will be a more suitable way to just uh you know it's the most easy way to get access to how to do options trading and how to just pick an option that's really work for you. So if you are a total beginner, I would suggest you to come to the Friday class. And if you are a current user and you are not sure about how to do options trading, and you just check a lot, you can just check on the strategy that we post every day, and then you are unaware of how to just do it in the UseSmart interface, then you can come to the Thursday class. Meanwhile, the iron condor is much more complicated when you're comparing to a vertical spread. So the Wednesday class will be the most advanced class for next week. And today, this will be the third psychology class so far. The first one we talk about be done, be rich, and it's quite famous among these series. And then the second class, I don't really remember what we talk about in there, but this is the third class. Then with the title of Emotional Alchemy. It's kind of like a very catchy clickbait, but at the end, this lesson is just to let you know how to master your trading emotions, how to from the reactions to the response. Sometimes the things that just affecting your P&L in the market is not your skill, it's not your knowledge. You already acquire all those necessary skill, and the most important things that affecting your P&L is your emotion. At least for me, the knowledge you can just obtain it elsewhere very easily. But the hardest part is how do you control yourself, your behavior yourself? How do you just don't let the emotion get rid of just control you? I spent like for about 2 years just to know about this core principle, which is the emotions contribute to 80% of my whole trading result. So for those who come in new, just give a little bit introductions. I'm Woo Jun Law, and I'm a USmart new trainer. And today's we will be having a classes called Emotional Alchemy, and we will have a free classes every week, and at least until so far. I'm not sure about the futures, but I do think that there will be some adjustment coming, and yeah, we also have a recording, but another recording we will kind of like setting a threshold for you to get access to. And for the over the next hour, we are going to explore something that will affect every single one of us in the market, which is our emotions. Yeah, and still I want to just give a disclaimer before ahead, and then yeah, in every classes, we are not going to upsell you any class, and then I'm not going to collect any of your personal information or any of your money. So if anyone come to you using our name, then please be aware that it might be a scam or it might be un, someone that come with a bad intentions. Okay. So before you dive in, let me ask you about this. Have you ever just sold a positions in panic, especially during the market crash on 2020, the COVID market pandemic, and the everything just dropped very heavily in March? And do you ever just get rid of your positions during the panic moment? And after you just sold your position in panic, you just watch it recover immediately, and then you just miss all the ride, and that you just can't take the suffer, and then or do you ever hold into a losing trade, and you hope that you will bounce back, you will turn around to your directions, but at the end you just watch it to fall further, and then you just become from a scalper to a swing trader, and then eventually to a long-term investor, just because you cannot just let your positions go. Yeah, sometimes that kind of thing happen. And yeah, so if you do agree with all of these situations above, if you are nodding your head right now, you are not alone. This is the exact challenges that we will address for today. So we will just start on today's class. And in today's journey, we will cover the first one is the power of emotional mastery. And the second is the emotional spectrum, which include the four major emotions in trading. And the third one, we will check on the real world applications. In this case, we will talk about the market crash in 2020. And the last one is the uncertainty master class, which I will teach you how to become a Zen master. You can just embrace the uncertainty instead. And I think today's lesson will go through quite quickly comparing to previous classes. And yeah, first of all, we will just share on the first one, the power of emotional mastery. And still the same boring way, I will just start with a story. And today I won't share any story of the student that I tutor. I will share a story of my own. So this is my personal story. And I start trading in 2018. And then I was like just the same normal people. I start with learning the basic, learning all those knowledge. And then I'm sure that I'm armed with the technical knowledge, but I have zero emotional preparations. I study the chart, I read the books, I know about the fundamental analysis. I go through a lot of classes, which included the fundamental analysis, the technical analysis, on the stock and also on cryptocurrency. All those, I go through quite a lot of classes. I'm feeling very comfort, and I feel that I'm ready to conquer the market. But within the first year, I lost around 70% of my portfolio. Not because I don't understand the chart, not because I don't understand what is the company doing, but because I cannot control my emotions. This is my biggest problem, because when I start at that time, I panic so during the dip. And I chase the trade to just want to recover my losses in the most faster way as possible. And I do a revenge trading. I just take quite a lot of trade without a proper solid reason. And I overtrade and things went very, very badly. And the last one is I'm stuck in the position managing. I do a micromanagement, you know. I tend to just control my position with a very tight stop loss, and I just trailing my stop loss very tight in a very tight manner, so that those trade that could have been a winning trade turn into a losing trade, or it turn into a break-even trade, and I just miss out all the rally. And at the end, after the first year of losing, I just lost in the spiral of emotional trading. I just keep on repeating the same thing and same thing. I lose money, I revenge trading. I lose money, then I revenge trading again and again. And I think this is my story getting interesting, because after I go through a lot of those, I stopped trading for a while. I stopped investing for a while, and I start to just take a look back at all the historical trade that I have made. And, you know, I start to make money afterwards, because I know that what is the reason behind it supporting me and my trading. And after that, I become a fund management, a fund management manager. I manage a very successful fund, and I do found out a company together with my another partners, and we hold a very big fund for the past 4 years. So the turning point for all of those is just it's more it wasn't more technical analysis or a better trading system. I'm still using the same old system that I'm using at the beginning. The most important turning point is I master my emotions. I know about the power of emotions, and I do just also build my own algo board and do all those trading. Please be aware that the quant trading is not for normal people, and many gurus, many teachers that introduce a quant trading because they want you to do a very high frequency trading so that they can earn from the commissions. And I do the quant trading and algo trading with a different purposes because I didn't get support from any trading platform. I didn't earn from any trading fee. So it was just to get rid of the control of emotions. So yeah. So I do learn about a little bit of coding, and I do a little bit of algo trading. And I will talk about the cost of emotional trading when you're comparing to the market performance. So the number doesn't lie. You can just believe in the numbers. Numbers always right. The people will be wrong, but numbers always right. Okay. So this is a study by Darbar show that in the past 20 years, while the S&P 500 have returned a 7.47 annually per annum, the average equity investor have only earned about 5.96% per annum. And that will be a 1.51% gap. And that gap is what we call the cost of emotional trading. Because if you don't do anything else, you just put it into the S&P, you can earn even more when you do all those entry and exit by yourself. And this is what we call the behavior gap, which is the 1.51%. And this is called the cost of emotional decisions making. Because when you do a trading decisions, emotional will involve. So if this number doesn't show a lot, in this case, only 1.51% doesn't seem to be like a lot, right? But if you compound it, it will be a very big number. Over the 20 years, because this is the study on 20 years, and if you are on a 10,000 investment at the beginning, and the last difference will be about 10,800 difference. So it's just more than your initial deposit. And the real money left on the table because of the emotional decisions. So this is the impound compounded. 1.51 doesn't seem a lot for 1 year, but if you compound it in 20 years, that will be a very huge number. And this is what you need to pay for emotional trading. And we already talked about the power of emotions that can change my trading journey. And we talk about the cost of doing emotional tradings. And now we'll go through the emotional spectrums. We need to face and react to different emotions. Before we master them, we first need to be aware of them. You need to recognize them so you can just proceed to the next step, which is mastering them. So now I will just introduce the emotional spectrum, which will be the 4 main emotions that get in the way of your trading journey. And the first one is fear, which is also called the protection paradox. And this is one of the 4 primary emotions that impact our trading. And you can check on that one. That one is actually the greed and fear index for stock. And that is even one for the crypto market. And you can check on it. There's a quote from Warren Buffett. We need to be greedy when the market is in fear, and we need to be in fear when the market is in greedy. we need to do the vice versa. And this also do the same with the Pareto rules, the 80-20 rules. Only 20% in the market is making money. So actually, if you do the opposite way with the major is doing in the market, and you might have a better chance of being profit. And you can see that this one is the latest capture from online greed and the fear and greed index. And you can see that the market is now in a greedy situation. So what you need to do, if you do the opposite, there might be a higher winning rate. This is the most that I can say. So let's dive into the fear. So fear is actually the brain's way to protecting us. But in trading, this is the response that, but often it will just protect us right out of the profitable positions. This is not a good thing to do. And in all, you can see that fear actually reacting in many different ways in trading. The first one is the fear of losing money. And what does it trigger? The trigger will be the possibility of the financial losses. And when you are fearing of losing money, you will be unable to make a decisions in a very quick manner. You cannot just trust your judgment. And it might cost you to just close your position by avoiding taking the risk. And the second one, the fear of missing out, which is usually called the FOMO. And people usually do this when they try to catch the profitable trade, but they are missing out the first trade and they just get it immediately without waiting for any retracement. And eventually they lose money. And they also fear of being wrong. That people tend to be feeling discomfort by admitting that they're wrong. So it might cause the trader to just hold into a losing position because they cannot admit that their analysis and prediction was incorrect. And they were just hoping the market to turn around to just justify that the analysis and prediction is right. And the fear of market volatility and the large and unpredictable price swing, it will make the outcome uncertain. So usually when people see the market is fluctuating very, very bigly, it will make you to feeling hesitate to entering a trade. Or it make you to just over tightening your stop loss. Just like I do when I might micromanage my position previously, because I'm afraid that it will come back and hit me. So I just do a very tight stop loss, and eventually the result getting better. It's not getting better, it's getting worse. Okay. And the fear of underperforms. Actually, you cannot compare yourself to the others when you're doing trading. Trading is not a game who win the most be the last winner. Trading is a game of who survived the longest in the market. So do not compare yourself to the others and try to just focus on yourself. And the fear of overexposure. When you're having too much capital on a risk in one single stock, and then you will feel very uncomfortable. You will feel heart race when during your sleep because the market is running, and you're feeling that you're unable to fall asleep because of your holding positions, and that will be a fear of overexposure. And the fear of unknown. You lack of control over the external factors like the economic data release, the the geopolitical events or the corporate news. So there are too many unknown news, unknown factors in the market, and will cause you to very hesitate and avoid the opportunity, although you are very well prepared. And the last one is the fear of repeating the past mistake. People tend to repeating the past mistake because they usually do the stupid thing, right? And if you are fearing of repeating a past mistake, it will also make you to overcautious behavior. You will make you to just because lose is the thing that you cannot avoid in the market. So when you try not to lose, it will make you to overcautious. And it will make you to not believing your own strategy. And we already talked about the fear. Now we're going to the greed. And greed is also what we call the acceleration trap. Greed, in the other hand, is more difficult when comparing to fear. Because fear will make you stop from trading. But greed will make you broke. So usually people will often, disguise itself as confident. People will make a mistake that thinking that they are very confident. And overconfident in the market is not a good thing. This one is the fear and greed index. The last page we show the fear and greed index for the stock. And this one is the one for cryptocurrency. And you can see the market is in extremely greed right now because the Bitcoin just break the record, And when you have the greed in you, you will feel overconfident. And there might be a demon voice inside you. The voice is just keep on telling you just a little bit more. When you are taking the profit, the voice will tell you it's not enough. A little bit more, just a little bit more. That is what we call the demon voice. It will make you to either just didn't do as your plan to take a profit, or it will make you to increase your position size after some certain winning strike. And this is not a good thing to look at. You might just lose on the very big positions, and then you will make all the previous win goes to zero. And we will talk about the last two will be the hope and regrets. It usually just work together like a partner in crime. The hope keep us in losing trade too long. And hope will make you become a positions trader, a positions holder. It will make you think that your losing positions will come back eventually. But regret will push us into trade that we shouldn't take. I cannot miss this one again. I already missed the last one. And now I cannot miss this one. I don't want to feel regret anymore. And then it will make you become a revenge trader. And you will just together, the hope and the regret together, they will create a cycle that will just destroy your trading life, your trading portfolio. So you need to have a very good in the emotional maintain, and which is the fear, the greed, the hope, and regrets. This is the four main emotion that get in the way of your trading. And now the third section. You are going quite fast today, but it's okay. People focus cannot retain so much. So we will just go through a little bit faster. And now we will talk about the real world applications, which is the emotion rulings the trade. In this case, we'll talk about the 2020 market crash study, and we'll just take a look at how emotional get involved along with the chart, along with the chart pattern movement. So now let's take a look at the real world example that tested every trader's emotional control, which is the 2020 market crash. And I separate in two phases. The first phase is the initial shock phase, which started from February 19th until March 23 in 2020. And at the time, the S&P 500 was peaked at 3,386 on February 19. And it dropped 34% in just 22 trading days. And the VIX reached an all-time high of 82 on March 16. And the S&P 500 hit the bottom at 2,200 something on March 23. This 34% is actually the fastest decline in the market history in just 23 days, 23 trading days. So you can just imagine that the emotional toll on the traders who have ever experienced anything like this before. The speed was unpredictable. So it make you challenging to just maintain the emotional equilibrium, because it dropped too fast. You cannot just imagine anything like this happen in the previous historical record. And this is actually a very good example of the emotional pressure cooker, I would say, pressure cooker. So just away from the chaos, some trader not only just survive, but they move to make some money on the recovery phase. Some people didn't lose and the crash, but they do make some money on the recovery phase, which is the second phase is the recovery phase. From March 24 until June 2020, the market recovered 47% from the March low. And this recovery was almost as sharp as the crash. So the faster it rebounds is also the strongest rebound in history. So for those who have lost their faith, have lost their capitals in the phase one, will be feeling very regrets that they cannot join the second phase. So in this thing, you can just verify a trader skill and the skill, not the technical skill, but the risk management skill and also the emotional management skill. For those who have a very proper risk management, even though they might lose some of their positions in the phase one, but they do have the ability to join the phase two and make the gain from the rebounds, the strongest rebound in the history. And for those who have a very good emotional control, they won't lose their faith. They will just do the same thing as previously what they have done. They will just keep on watching the chart, spot for the opportunity and get in. They won't just because of the crash and they will just quit the market because of that. And you will see the four horsemen of trading apocalypse, which you can just in this case I'm using the 2020 market crash as an example. The first one is the paralyzing fear. When the news is overflow, like the COVID death, the lockdown, the economic collapse, and there are too many information getting in their head, and they will start to just have a paralyzing fear, and the account value that drop very fast, like 5 to 10% daily, will just crash their confidence. And they are very feeling uncertainties about the market bottom. This is what we call the paralyzing fear. And then the second horseman, which is the false hope. There are multiple, I say the dead cat rebounds, the fake rebounds, and they will make you to just rise a little bit hope, but eventually it dropped even further. So in these 23 days, it's actually the most chaotic the most chaotic trading day in the history. Which they have quite a high frequency of the false hope on the market rebounds, and they are always looking for a V-shaped recovery, but it is too early because they hold a position. And then the third one will be the panic-driven decisions. They will bulk selling at the market low because they already go through quite a lot of the decade rebounds, and they do think that now the market is rebounding, but they're feeling unconfident that they think that they will be lower because all the confidence was crashed in the previous drop. So they start to bulk selling at the market low. That didn't do a buy low sell high, but they do a buy high sell low instead. So they're over leveraged on preserving the bottom. So they abandon all the trading plan and strategy just after all those false hope and false predictions, false analysis. And the last one is the analysis paralysis. They have too many conflicting information. Even though the market is rebounding, but after they compare with the news, all the people say about the uncertainties in the current situations, that they're feeling very conflicting around the chart in between the chart and the real world situations. And they have no historical comparison to compare with because this drop is the largest in the history. So that have a very difficult, they have very very big difficulties in analyzing. So it might seem that the traditions indicator will be failing and at this kind of black swan events. And the key success factor during this crisis, I would say, the first one is emotional management. Do not lose your faith. You need to have let me introduce you some of the tools that I've been using. The first one is the meditations practice. When you are keep away from your phone and you don't want to see your portfolio just dropping 5 to 10% daily, you need to have maintain a very good mentally health. And I found that meditations or just falling asleep is quite a good practice to do so. And the second is I would tend to do a very regular exercise routine. I will do exercise every day, so I will maintain the health in not just my mental, but physically also. And I also do a trading journal. Previously, I only do the trading journal on the chart, but now, at that time, during the crash, I start to just recording down my emotions, my emotional changing. And I will just keep on have a regular break from the screen time. I won't just take a look at the screen all the time. I will just try to gain back from myself. The second is the risk management. Reduce your positions when you're feeling uncomfortable and unconfident. So you need to reduce the position size. And you can use a wider stop loss so that you can have you can let your account bear with the volatility. Because at this time of timing, actually, if you do a micromanagement, you do have a type stop loss that you are unable to stay until the rebounds happen. So use a wide stop loss might be a good choice, but the first thing first, you need to reduce your position size. And if you are feeling very at the peak uncertainties level, I would suggest you do not hold any overnight positions. And you want to reserve your cash at certain level so you'll be feeling comfortable with tradings and investment. The last one is the information management. So you need to limit the news consumptions to specific times. And you need to focus on price action over prediction. Don't try to guess on what is going to happen and what is going to go. Just focus on what is happening right now. And that will do the task. Predict the future is not always a good approach to do so. And you may able to just have a regular review of your trading journey. Here comes the final sections of today's lesson, the uncertainty masterclass to just control your emotion. So at the beginning, we'll start from get to know about this emotion, recognize them. And now we'll just talk about how to control all those emotions. So the pro trader, the most profitable trader in the market, tend to have the what we call the Zen traders mindset, which they will accept the uncertainties. And this is what they will do. The probability versus the prediction. The best traders are not the fortune teller. They are the probability management. They have learned to be comfortable with the uncertainty. So then they actually manage on the probability. They don't do predictions. Don't predict what the market is going to do. What they are doing is just to compare current situation with the historical performance, and they will know about the probability if that is going up or down. So they don't do a prediction, but they believe on the market will repeat itself to believe on the probability. So the best trader is actually not the predictions trader, but there will be the probability manager, I would say. And this is actually the 5 steps to building an emotional resilience. The first step is you need to cultivate a self-awareness. Why do you need to do so? You need to understand your emotional triggers and behavior pattern. And you can just keep a trading journal to record down your emotions during the trade. And you can identify the recurring issues like fear or overconfidence. So the first one is cultivate the self-awareness and record them down. And the second step is you need to develop emotional control. You need to prevent the impulsive decision driven by emotions like the greed and panic. And you can use the mindfulness technique such as deep breathing, or you can just taking a break when you're during a high stress moment. And the third step is manage your risk in a better way, strategically. And it can limit the financial exposure so that it can reduce your stress and build your confidence. And you can set either a very strict position size and you use stop loss order always, and you can diversify to avoid a overexposure to a single trade. And after you do the risk management, you come to recognize and address your biases. The biases like the confirmation bias and the loss aversions distort decisions making. So you need to have a regularly challenge your assumptions and seek for alternative perspective before the finalize the decisions. And the last one is focus on long-term progress. You don't focus on the short-term result. So it can just reduce the focus on the short-term fluctuations, and it can lower your risk. You can lower your stress, not your risk. You can lower your stress. Don't just focus on now. Try to imagine yourself in 5 years, in 10 years. And at that time, your performance will be way greater when you compare it to now. The current fluctuation is just it won't hold forever. It won't last forever. So you need to evaluate your skill, your performance over weeks or months, not just in these few days. And here come the ends of the lessons. And this is actually my personal contact in WeCom. And feel free to contact me if you have any questions, or if you do want to raise another questions, which is like the technical questions, feel free to do so. Or if you have any topic that you feel that want to discuss with, you can also raise to us, and then we will arrange lessons for that topic. And at the end of the lessons, I will just share about the benefit of opening a USMA account right now. If you open a USMA account right now, then you will have you're able to get a 0.02 share of Tesla. And if you deposit more, you'll get even more cash voucher. And if you are feeling interested and want to start your trading and investing journey, and you can use the QR code at there, and there's the QR for registration, and the SG is the one for the Singapore apps, and also what we call the global apps. And the below one is for those who based in Hong Kong. And here comes the end of our lessons. Thank you so much. And once again, I will just raise again about next week class. In next class, if you are a total beginner, do join for the Friday class. We will talk about how to do options trading from 0 to 1, not from A to Z, but from 0 to 1. We cannot cover everything, but I will make sure to cover the most important factors in options trading, including the practical part. And then if you want to go a little bit more advanced, which is the vertical spread class, you can go for the Thursday class. And that is also the most common strategy that we use and we recommend through the apps and in the VIP group. And after that, if you want to just know a little bit more about how to counter for a ranging market, you can join for the Wednesday class on Iron Condo. So thank you very much for your time, and I appreciate all of you joining, and hope to see you guys on the next lessons. And at the end of the lessons, we'll just share about the disclaimer. Thank you all for joining, and hope you guys have a very good weekend. Good night. Thank you.